Hello, this is Greg, and I am going to be solving a Wiley Plus accounting problem in Quickbooks today and showing how to do some journal entries. Alright, so first we're going to start by looking at the Wiley Plus problem. It states here that Jansen Hardware Store completed these merchandising transactions in the month of May. It gives us a beginning cash balance of 11,145 and a matching common stock of 11,145. And then we're supposed to take all these transactions and journalize them. Now, the first thing I'm going to do, even though it's not part of the problem, is I'm going to look here and just to confirm that we have nothing on the books as of now, nothing on the balance sheet. So I'm going to go to the top of the page and we see add a transaction. That's always there, so I'm going to click journal entry. And then since all these transactions are in May and I want a pre-existing balance for cash and common stock, I'm going to go to my little calendar widget here and find April 2nd. I hate to type things in on keys, so I love the little calendar widget. And we are going to debit cash to begin with for that total of 11,145. Okay, so 11,145. And then we're going to credit common stock, so we type in the first few letters and it'll pop up, and you see automatically it matches your first entry. Now if you have multiple debits or multiple credits, you're going to have to undo that and type in that manually, but if there's just one debit and one credit, it will automatically match and makes entry a little bit simpler. Okay, and make sure our journal date is correct. Very important. The first thing you should always do is change your date. Make that a habit because it can be easy to forget. And we're going to hit save and new. And then now our first one, May 1st, merchandise on account from Vanco Wholesale Supply, $9,200. Okay, so we are going to change our date, make it May 1st, and the first thing we're going to do is we are going to debit merchandise inventory. So type merchandise inventory, debit 9,200, and then we are going to credit accounts payable, and all your top items here generally are listed. Automatically completed it for me. When you have an accounts payable or an accounts receivable, QuickBooks is going to want to know the customer or the vendor attached to that particular account. When it's an accounts payable, it is a vendor, so we're going to go over here. I've already put in the vendors and customers needed on trial runs, and it's a pretty simple process to add one. You hit add new, type in the name. You can add other details if you'd like, but we've already got it in here, so we're just going to put in Vanco Wholesale. I've got the date right. Okay, so we're going to save and new. Okay, now we're going to go to the next day, May 2nd. So I am going to change the date. Okay, we're May 2nd. Sold merchandise on account, $5,400. So we're going to do accounts receivable. Okay, and we're going to debit that, $5,400. Okay, next one down, we are going to credit sales for $5,400. Okay, sales for some reason does not like to pop up at the beginning there. There we go, we've got sales. Credit automatically, $5,400. Okay, accounts receivable is another account, so we need to enter in the name of that. They do not give us one, so we're going to use a generic customer one name for them. Okay, so we've got our debit, we've got our credit. We've got our customer name and we've got the correct date. So we're gonna hit save and new for this one. This is actually a two-parter, so we're gonna stay on May 2nd. We've recorded the sale. Now we need to record the cost of the inventory sold. And it lets us know that the cost of the merchandise was $45.97. So we are going to here cost of goods sold. Okay, we're going to debit that $45.97. Okay, and then merchandise inventory we're going to credit for the same amount. Okay, and the date is correct, so we are moving on. Okay, next day, May 5th. Okay, change the date. Received credit from Vanco Wholesale for merchandise returned, $400. All right, so we're going to debit accounts payable. That's going to be $400. Okay, and then we're going to credit merchandise inventory for $400. It's right there, $400. Accounts payable, come over for the name. We know this is Vanco Wholesale, so we put them in there. Okay, we've got everything here. Okay, save and enter. Next date up is the May 9th, so we're going to change the date. Okay, received collections in full, less discounts from customers billed on May 2nd. Okay, so May 2nd, we see that it was $5,400. So the first thing we know, we're eventually going to credit accounts receivable that $5,400. But first we're going to do the debits and cash. We need to here calculate the discount ourselves, which is pretty easy to do. And so we get a $5,238 cash debit. And the discount, the sales discounts, I had to type this category in myself. They list it on the income line. I would prefer that it was listed strictly as a contra revenue account, but alas, it's not. You know, they have their own way of handling that internally, but it will subtract from your total income. It will do the right thing. It just looks a little odd the way they word it. Okay, so we're going to do 162 instead there. Okay, and then the $5,400 credit to accounts receivable. And once again, the name. And this is, gotta remember, it is from the customer billed on May 2nd, so that is customer number 1. All right, so May 9th, the date's correct. We've got all our totals. We can go on. Okay, next date is the 10th. Let's change the date here. Okay, paid Vanco Wholesale Supply in full, less discount. All right, so accounts payable. Debit $8,800. Okay, cash $86.24. Credit, once again, since it's a multiple entry, you're going to have to undo the autocomplete there. And then merchandise inventory, we're going to credit for that discount amount. Okay, and accounts payable. This is Vanco, so we are set here. Dates match up. All our info is here. Let's move on. Okay, next is May 11th, purchase supplies for cash, $12.54. Okay, so we're going to go up here and do supplies. Now, QuickBooks lists supplies as an expense. I like to treat it, and what we've learned so far is we treat it as an asset. And then we can do a supply expense as an adjusted entry at the end. So I had to create a sub-account of uncategorized assets for supplies. So I'm going to use that one and not their expense category. It's for $12.54 debit. So we're going to debit that. And then we are going to credit cash for that amount, $12.54. Automatically done. No accounts to mess with over here, no names. So we've got the right date, 5/10. Actually, see, this is why you put the date in first. We want to do May 11th. Okay, and we're good. Okay, next date is May 12th. So let's enter the date. Okay, and what do we have going on? We have purchased merchandise for cash, $37.61. Okay, so we're going to come over here and merchandise inventory, we're going to debit for $37.61. Okay, and we're going to credit cash for that same amount, and it will do that for us. And then 5/12, the correct date, and we can move on. Okay, next up we have May 15th, so we're going to change the date, May 15th. Received $320 refund for return of poor quality merchandise from supplier on cash purchase. Okay, so this was the last purchase that we made. So May 15th, we're going to debit cash for $320. And this was a cash purchase, no accounts payable or receivable, so we don't need to enter in any names. And we're going to credit merchandise inventory for $300. Okay, May 15th date's right. Let's move on. Next up, we have May 17th. Change the date. Come up here, see what we have going on. Purchased merchandise from Strickler Distributors, so another vendor, for $3,200. Alright, so we are going to debit merchandise inventory for $3,200. And we're going to credit accounts payable for $3,200. And over here, it's an accounts payable, so we're going to find Strickler Distributor vendor. We also have a Strickler that's a customer, but we're looking for a vendor, so there we go. Enter that in. Correct date. Everything lines up. Save and continue. Next up, we have May 19th. Where we paid freight on the May 17th purchase, and that was $348. So that's going to go into our merchandise inventory. So merchandise inventory, we're going to debit for $348. And cash is going to be credited for that amount. And once again, that will complete that for you automatically. And this is for May 19th. Okay, date, transactions, moving on. Next up is May 24th. We've got another sale here, so we know we're going to have a two-step process. Sold merchandise for cash, $75.23. No customer mentioned, so we're going to assume it's a different customer. Cost of merchandise was $5,600. Okay, so First up, change the date, May 24th. Okay, then the first thing we're going to do is we're going to record the sale. It was a cash sale. So, no, wrong. Okay, cash. And we are going to debit that for $75.23. And then we're going to come over here and we're going to credit sales for the same amount. Sales and $75.23. For some reason, it really does not like to take this category. I'm probably going to have to come back and correct it. I've had to do this in the past. Yep. Okay, so we're going to come up here. We're going to hit sales. We're going to enter. And we're going to try this again. Okay, try it again. There we go. It took it. It only does that with that particular category, with that particular account. Next step in same day, still May 24th, we're now going to record the cost of inventory. So we're going to do cost of goods sold. Okay, cost of goods sold. Okay, and that is going to be a debit of $5,600. And a merchandise inventory is going to be a credit of $5,600. All right. And we're good. We're good on the date. Now, if you ever have a question about a previous transaction, feel free. Like, I can look back to see, make sure on May 2nd, I can look up here. These are the recent journal entries. And I can go here more. Okay, I can see $45.97 cost of goods sold. That's correct. Okay, so we've done that. So now we are up to, we've sold the merchandise. We've taken care of all that. Let's just double check to make sure we did that. Yes, that's our most recent. So save that and move on to the next one. Next day is 5/25. It's always best, if you have a doubt, just go back and check it. It doesn't cost you anything to be safe. May 25th, purchased merchandise from Fasteners Inc. for $11.14. All right, so we're going to do a merchandise inventory debit for $11.14. And we're going to credit accounts payable for $11.14. Okay, and it's an accounts payable, so we find Fasteners Inc. here. It's a vendor. Enter them in and make sure we've got the right date. We've got the right date, so we're good. Okay, next up, May 27th. So we enter the date. Let's see what we've got going on here. Paid Strickler distributors in full, less discount. Okay, so come down May 27th. We are going to debit accounts payable for $3,200. Right, accounts payable, debit $3,200. Okay, and we're going to manually calculate the discount again and make that adjustment. Cash is going to be 31.36 credit. So we have to change that, 31.36. And merchandise inventory is going to be the discount total, and look, it already figured that out for us. And that is on the 27th, so we're good here. Accounts payable. This is Strickler. Okay, so save and new. Okay, now moving on to the 29th. Made refunds to cash customers for returned merchandise. And it also gives us the value. So first thing we're going to do here is change the date to the 29th. Okay, and then sales return. And allowances. Okay, so we're going to go here, look it up, sales, returns, and allowances. Now they list this once again as a income rather than a contra revenue account, but hey, once again, if that's the system you have, that's what you deal with. So we are going to debit that for 148. Okay, and then we are going to credit cash for 148. So cash credit 148. All right, and this is the 29th. So we're good there. That handles the refund of cash. Now we have to correct the inventory. So once again, it's still 529. And we're going to do a merchandise inventory debit of 125. And we are going to credit cost of goods sold for 125. Okay, the 29th, we're good there. Okay, and finally, last entry is the 31st. Let's change the date. Sold merchandise on account 1783. Okay, another unnamed customer. We will assume they're a different customer, so we're going to put them in as customer 2. But first things first, we're going to debit accounts receivable for 1783. 1783, and then we're gonna credit sales for 1783, and accounts receivable be customer number 2. Okay, and the date's correct. Okay, you go away. Okay, the second part, we need to deal with the cost of inventory. So cost of goods sold, 1156, debit. Okay, 1156. And then merchandise inventory, credit for 1156. And the date's correct. Save and new. Okay, we're good. If we have any doubts, once again, if you're not sure you hit something, just go ahead and check it. We're going to look at my May 9th just to make sure. Go to more. Okay, we are good there. So we're going to do save. All right, we are done with our entries. So just close it out here. Okay, now we see all the journal entries here. And I can go to reports, and there's a whole bunch of different reports that you can run. We can look at the balance sheet, and we'll see here it listed a little bit differently than I'm used to seeing. The everything is kind of flip-flopped, but everything is there. You've got your accounts receivable, you've got your other current assets, cash, which is the most liquid, so you would think it would be up higher, but hey, this is how they do it. Then you've got your liabilities and your equity. Okay, and we can also look at, if you're looking for the income statement, they call it profit and loss. You can always relabel it to say income statement if you wanted. And it's for, right now we have it for a period of January 1st to January 20th, which is the only entries we put in that would show up as income are the May transactions. So we can see here that we have sales, we have our contra sales accounts, sales discount and refunds are here listed as negatives. It gives us our total cost of goods sold, our gross profit, net operating income, net income. If you're looking for a percentage, you can go to customize, and we look down here and there's a percent of income, and we'll run this report and you'll see that there's another column that states everything in total of, or in terms of percentage of total income. So total income is obviously 100%. Sales is actually more because there are some deductions. And we have gross profit here is 22.01% of your total income. So a lot of people want to see that number. I wish there were more accounting specific ratios available in QuickBooks, but that's just not what they're about. You can get to them, but it takes some doing and you have to do some manual calculations yourself. Now you can also view a trial balance, which it lists right here. That way you make sure your debits and your credits all match up. And they are a lot of different reports that you can look at. You have your general ledger, you have your statement of cash flows here, but most people are interested in the profit and loss and the balance sheet. If you have any difficulties, QuickBooks is pretty user friendly. You can go back and repair your mistakes, and if you can't, there's a little question mark up here that'll bring up a help topic. Type in the topic and they'll either send you to their knowledge base, like a frequently asked questions, or they will respond to you. They say within half an hour they'll send an answer to your email. So it is very easy to get help if you get stuck. Other than that, I think this is pretty much covers what we needed to do. I am appreciative of the opportunity. I learned a lot about using QuickBooks doing this. It's a lot more straightforward than I thought, but then I've had a lot of accounting to this date now, so things that a month ago would have seemed undecipherable actually seem pretty easy now. And I look forward to learning even more about QuickBooks over time. Thank you very much for your time, and I hope you enjoyed my presentation.